With the great and vast evolution of technology, everything is becoming more efficient and better than it previously was, and so is the currency itself. Have you ever heard of the term digital currency? Well, not that it is something in the air, but you can do your daily dealings with it even if you don't have it physically in your hand, like your regular currency. But how does it actually work? Is there some model of this currency that we need to know about? Let's find out in this video today. The central bank digital currencies have now become widely known, and many of the central banks are already experimenting with them. These currencies are considered much better than the regular currencies that we normally use in our daily lives. But what exactly is a central bank digital currency? Central bank digital currencies, or CBDCs, are the digital equivalents of government-issued currencies that are not linked to a physical commodity. They are issued by central banks, which are responsible for providing financial services to a country's government and commercial banking system, setting monetary policy and issuing currency. The Federal Reserve System of the United States, the Bank of Japan, the People's Bank of China known as PBOC, and Germany's Deutsche Bundesbank are all examples of central banks. CBDCs are related to, but not identical to, stablecoins. Stablecoins are a type of private stabilized cryptocurrency that is pegged to another currency, commodity, or financial instrument in order to keep its value relatively stable over time. CBDCs, unlike cryptocurrencies, are issued and managed by the government. More than 80 countries are investigating or creating CBDCs, and they are at varied levels of development. Some projects are dormant or terminated, while others have already launched their digital currencies. Because CBDCs may have an impact on the cryptocurrency market, understanding them is critical if you plan to invest in Bitcoin. So how does a central bank digital currency work? Each CBDC is a digital representation of a country's existing fiat money, and it works the same way. Since many countries are working on their own CBDCs, there will likely be differences in how they work, but follow the same basic model. What happens here is that the country's central bank issues its CBDC, which has the backing of the federal government. The CBDC can then be used as legal tender in transactions like paying employees or purchasing goods and services. This may sound similar to something we already have. After all, you can transfer money digitally from your bank account to a friend's account at another bank. A CBDC, on the other hand, eliminates the requirement for this type of transaction to go through many banks and take several business days. It could all happen almost instantly on a single digital ledger. Customers would also not acquire a commercial bank account to use a CBDC. CBDCs would allow unbanked individuals to transfer money digitally. And along with that, there are two main types of central bank digital currencies, which are known as retail central bank digital currencies and wholesale central bank digital currencies. Here's what makes them different and how they work. When it comes to retail CBDCs, they are issued to the general public. Under this model, consumers are able to own a CBDC in a wallet or account and use it for payments. This form of CBDC would function as a public digital banking option available to everybody. This could be especially beneficial for customers who do not have access to regular banking services. There is also no chance of a bank failure because the funds are government-backed. Several countries, notably the United States, have elected to adopt the retail CBDC model. The Bahamas, the first country to make CBDC publicly available, likewise adopted the retail approach. But when we talk about wholesale CBDCs, they are used by the financial institutions. Banks and other financial institutions could move funds and settle transactions more swiftly by using a central bank CBDC. While this form of CBDC would increase domestic payment efficiency, it might also be extremely valuable for cross-border payments. Another advantage of a wholesale CBDC is increased security. The digital ledger used by these currencies to process and record transactions may aid in the prevention of banking fraud. Singapore, Malaysia, and Saudi Arabia are among the countries focusing on a wholesale CBDC. However, the majority are working on either a retail or hybrid CBDC. Apart from that, cryptocurrency can be considered another type of digital currency. These currencies rely on cryptography to safeguard and verify network transactions. In addition, cryptography is utilized to regulate and control the generation of such currencies. Cryptocurrency examples include Bitcoin and Ethereum. Cryptocurrencies may or may not be regulated depending on the jurisdiction. With that being said, we can assume that there are several good things about these currencies. What are they? Let's take a look. So the number one thing is that a CBDC might result in transactions that are significantly faster, less expensive, and more secure, benefiting everyone involved. consumers in countries that establish retail CBDCs can gain direct access to central bank funds. CBDCs could alleviate the problem of vast unbanked populations in several nations. Consumers would not have to take the risk of storing their money with a commercial bank that could fail. Their funds are safe as long as their country's central bank is stable. Another good thing about such currencies is that the money is considerably easier to track here, because all CBDC transactions are recorded on a digital ledger. This could aid authorities in detecting fraud and other illegal activity. But there are cons of these currencies too. A country's central bank would have full control over its CBDC. The central bank could theoretically decide to put restrictions on the types of transactions it allows. The central bank would have information of every transaction and at least some information on CBDC users. There is always the possibility of privacy issues when a large organization collects so much user data. CBDCs will take time to gain traction. Some members of the population will be unable to use digital currencies. Others may be hesitant because they are skeptical of digital currencies. Commercial banks may lose a substantial chunk of their revenues if consumers have access to retail CBDCs. But despite the shortcomings, the world is seeing a growing trend of CBDCs, and some major central banks around the world have begun issuing their own digital currencies. Like China, where the People's Bank of China has been testing digital yuan, or ECNY, in a number of Chinese cities. Millions of Chinese citizens are already using the digital yuan, which is intended for retail transactions. Apart from that, Sweden's Riksbank has also been testing the e-krona digital currency, and to give the general public access to a safe and effective payment system. England is another country on the list where the Bank of England is considering introducing Bitcoin cryptocurrency. The UK's payment system would be backed by a digital currency, potentially reducing the country's reliance on cash. Among these, Canada is also looking for the same ways, as the countries discussed before, to introduce the digital currency, and the Bank of Canada has been conducting research and consultations on the idea of creating a CBDC. So what exactly is the future goal of CBDCs? Many people in the United States and many other countries do not have access to financial services. In 2020, 5% of adults in the United States did not have a bank account. A further 13% of the US people with bank accounts used expensive alternative services such as money orders, payday loans, and check cashing services instead. CBDC's primary objective is to provide privacy, transferability, ease, accessibility, and financial security to businesses and consumers. CBDCs could also minimize the cost of maintaining a complicated financial system, cut cross-border transaction costs, and provide lower-cost options to people who now utilize alternative money transfer methods. CBDCs would also lessen the dangers associated with current digital currencies, or cryptocurrencies. Cryptocurrencies are extremely volatile, with their value fluctuating all the time. This volatility may cause considerable financial hardship in many people and have an impact on the economy's overall stability. CBDCs, which are backed by the government and administered by a central bank, would provide a safe way for households, consumers, and companies to exchange digital currencies. What are your thoughts on this? Let us know in the comment section below. Make sure to hit the subscribe button and subscribe to the channel to always stay updated. See you next time.